Good morning, good afternoon, and good night, wherever you're watching around the world. Welcome to the BitLab Academy daily live streams. My name is Kelly Kellum. That's my Twitter right there, right under my name. Definitely give me a follow. We're sharing so much great information every day here on the daily live streams, as well as in my Twitter and on the BitLab Academy Twitter, which you can find right there. Make sure you're just following at Academy BitLab, and here on YouTube, it's youtube.com/@ BitLab Academy. So make sure you're doing checking out the right things there. There's a lot of scammers out there. We were dealing with something a little bit in-house here, sorted it all out, but I just want to sort of preach safety and clarity here. Make sure you are going to the right websites. You're actually going through to the links that you not just searching for, whether it be OpenSea or Coinbase or whatever, but you're typing those URLs in, so you're getting the exact one, not a scammer. Welcome, everybody. How are you doing today? Markets are chopping around a little bit, shaking the little shrimps off the side of the boat. Don't be a shrimp, be a whale, baby. That's what we got to do. We got to make sure that we are using the same practices that those smart money players, those big money players, the institutions, the whales, the people that have proven that they've been able to make it in the markets. We've got to emulate those same sort of strategies, and that's what we're all about here. If this is your first time, last time, or only time, just do us a favor, please, and hit that like button or dislike. Hit that subscribe button, ding that bell. We're building a wonderful community here, bridging that gap from beginner to pro, trying to give you digestible information, sharing what's going on in the market on a daily basis, as well as helping bring those beginners along and let you know what the strategies we're using to navigate this market profitably and consistently over time. Again, my name is Kelly Kellum. There we go. My name is Kelly Kellum. I host here every day at 10:30 a.m. Eastern Standard Time, and we're just going to kind of sort of jump into it here. As you can see, I'm wearing a coat and a hoodie because it's chilly. And just like when it's cold outside, you protect yourself. When the markets aren't certain right now, really all the time, but when the markets aren't certain, we don't have a clearly defined trend. We also want to protect our capital. You need to come to the table every day using the right mindset and putting into practice the right sort of set of strategies. So let's go ahead and jump into the charts today, or jump onto my screen. First, as I said, make sure you are following at Academy BitLab. This is the BitLab Academy Twitter account here. We're up to 1,500 followers so far. Of course, you can also come and follow me, which is right here at Kelly Kellum, and that's Kellam, and it's only 2 L's twice, not 3 L's, not an underscore. I'm only pointing this out not to pump my page. I just want to make sure people are following the right stuff, and I'll be referring to some of the charts I have on here pretty regularly. So, how's everybody doing? Where are you tuned in from? What city, state, or country? Let us know. We're trying to build a community here of not just me talking at you, but all of us sort of engaging here. I'm going to make it my very best effort to try to engage, especially on these live streams, more with the chat. I want to shout out my cousin who's here watching for the first time. He sent me a message the other day, wanted me to teach him more about crypto and Bitcoin and all this. I said, hey, man, I do a daily live stream that is free, with sharing my experiences, sharing my strategies, sharing things I've learned from a wealth of individuals that have, not only my own successes, but also other people that have had huge success within the industry. So shout out to him, and shout out to everybody, especially if you've gotten into crypto, if you're born on date, meaning your first week or month that you got into crypto and actually made your first purchase, whether it's $1 or $100. No matter what it is, if it's been in the last year, I applaud you for sticking through the turbulent 2022 that we had and still being here, being able to start getting prepared for the next bull run, because it's this time right now in the markets that makes those millionaires, makes those billionaires, makes profits. Let's even drop the word millionaire and billionaire. Some people are just hoping to get $1,500 so they can, fix their used car. Some people are just trying to help pay rent. Doesn't matter what your goal is in mind. Everybody starts somewhere, and we're here to help each other along. So, again, let's go ahead and jump in. Give me, again, smash the likes if you haven't yet. Please hit those likes. It's a free way to really help out the channel, help support the algorithm with YouTube, sharing us to more people. Hit that subscribe, ding that bell, and let me know if there's any issue with any audio or video. I'll be watching the chat right here. Shout out to Matt C, Crimson Caravan, Cashy Cats, Chase Kellum, my cousin. We've got so many people in here, so many familiar names already. We've been building a great community. Alexandra G, Alex Green. I mean, there's so many people. Justin Eubanks, Karen Swigart. So let's go ahead and get to it because that's why you're here. You don't care for me just to talk about people in the chat, right? Although I love you, we all want to get into the charts. All righty. So where are we at? We're always going to start the day with that sort of 3-cycle sort of analogy. Macro, midterm, micro, and we're just going to assess this. Where are we at? If this was the bottom of the bottom of the bear market in 2019, coming into 2018, coming into 2019, where everybody thought it was going to go down to $1,000, that proved to be the bottom, and that's the sort of entry we're looking for. If you're more conservative, of course, you can wait for that initial impulse of the bull market, a pullback, and have another opportunity for entry here. Similarly, as you see, I've mapped out here, and this upward target is not necessarily something I'm locked in on. I'm not saying it's going to go to $205,000, although I think it does have a high chance. What I've done here is I just took a 3.618 Fibonacci extension from the top of the, basically from the bottom here, from the top of the previous bull market to the bottom here, and the extension came up here to the 3.618, which is where our this previous all-time high was, and I did the same Fibonacci measurement from this top here all the way to the bottom, and that says, just based on the Fibonacci, we'll see if we get there. I don't really care what the end point is. That's not what we're focused on, and anybody that's looking for that moon math, you're in the wrong spot, because what we're really talking about, what we really want to attack here when we're approaching the markets, when we're approaching the charts, is what is the path that's going to take, and how can I capitalize on that path? And in this case, how can we capitalize on this being another smart money accumulation zone, which is this low right here? Is this a market bottom? If so, once we're already here, is it too late to get in? Should I be getting out because we're going to get a rejection here? This is what we're discussing on this channel on a daily basis. And as well, how does this all, and we have to remember, how does this all fit into the grander picture, the grander global financial ecosystem with traditional markets, assets, bonds, treasury yield, treasury, all the traditional assets is my point here. And we look at things like this week. We had a massive week. We had the earnings reports from Exxon, Pfizer, Apple, Amazon, Microsoft, Google. I mean, and the list goes on and on and on. In addition to that, we had the FOMC meeting on Wednesday. I'm not sure if I even spoke about it yesterday, just because there's other things going on. But we had the FOMC meeting come out Wednesday. And that was determining the federal funds rate. And whether or not you know or not know, that's what we're here for. That's what this channel is for. How do we bridge the knowledge with all this and integrate it into the way we're navigating and interacting with the market? Well, the Fed fund rate came in at 25 basis points, which is 1/4%. I think now we're at about 4.5%, 4.25 or 4.5%. But the 25 basis points is the nugget of info here we're looking at, and that was completely expected. And then in addition to it being completely expected, meaning it was priced into the market responded positively to that. In addition to that, following at 2:30, 30 minutes after the numbers came out, we had the press conference from Chair Powell, Jerome Powell, and he was very nonchalant about, he was like the Matrix, just like dodging questions about what's going on, what their thoughts are moving forward, because they don't want to just say they're not going to do another rate hike. They entertain the possibility of that. I think it's more likely we're going to get another 25 basis point hike, but what he did say, and this is what's interesting about today, and this is what I want to talk about today. Today we're talking, obviously the thumbnail is a pullback inbound. Well, we need to discuss that. And today we got Apple missing their earnings report yesterday in aftermarket, and basically right at 4 o'clock, their earnings report came out. So there's less spending going into Apple products. There's also, of course, there's been supply chain issues. And we have to remember the dollar, the DXY, the dollar index, the value of the dollar as it's compared to other currencies around the world. The dollar has been incredibly strong compared to other assets, compared to other sovereign currencies. So that means products like expensive products like tech, Apple, spending on retail stuff, especially coming out of the U.S., of course, is going to come down because it becomes exorbitantly expensive in those areas. So inflation and the Fed and monetary policy, as much as I hate to admit it, it has a direct impact on what's going on with Bitcoin and the crypto market. So what he said, and which is why today is a little bit confusing for markets. What he said was somebody asked him during the press conference regarding, are they still waiting for unemployment to go up, or AKA employment to go down, as the true signal of when they've got the inflation, the rates where they want, and they can start, they can pause raising rates, essentially pivoting on their decisions. Well, today, he said he doesn't think now, because based on all the things that came out, all the things that fed into the inflation issues and the supply chain issues, aka the global pandemic in 2020 and the global economic shutdown. He said, maybe we don't need that to come into place, because they're also seeing huge numbers showing that inflation is coming down rather quickly, as some of these issues that have been lingering since the pandemic have, I don't want to say sorted themselves out, but they're starting to work towards that point. So he did acknowledge maybe we don't need the unemployment numbers to go way up for us to meet that target. And then today, of course, we got the non-farm payroll numbers. We got unemployment rate. We got the average hourly earnings. We got all this stuff came out this morning. And if you remember looking at the charts, and just so you know, stick around. If you don't care about the Fed and all this, it's okay. We're jumping into the charts, but we have to tie all this together so we can understand what's going on with the price data. Now, we can see right here, 8 o'clock, we're starting to pull back a little bit. And just looking technically on the charts, not even looking at the numbers at the Fed that were printed today for economic numbers, economic data, we can see that this is also basically sort of a high traffic node right now. We can see all this volume on the VPVR. This is measuring volume, how much has been traded at these particular price levels, and we can see right here. This is a POC. This is a point of control on this time frame, and this is a lot of interaction here. A little support, a lot of resistance. And we did reject off this, but in addition to rejecting off this, we could see this was sort of playing out ahead of time. I'm actually filming a bunch more lessons for BitLab Academy today. If you haven't yet, by the way, please go and check out bitlabacademy.com. Sign up for this newsletter. I'm putting out the newsletter today, just so you know. And you get entered also, in addition to getting the newsletter, you get entered to win a free month of access to the courses and the indicators. So make sure you come and check this out. But I'm filming for that today and tomorrow, a bunch of the lessons for the candles course, which just looking, not even looking at any of the data from the Fed, not looking at the data from earnings, just looking at the candles alone, you can see momentum increasing and starting to wither as we come into this point of control, this high volume node, and we end up getting rejected off of it. And then at 8:30, we can see the time here on the bottom of the chart. At 8:30, right when that data came out, the market sold off. And what I want to caution you all on, when you're looking at charts, when you're debating a trade, when you're debating an entry, when you're debating a sell or a take profit, take a deep breath and remember to ask yourself, do I have a plan? Do I know what my plan is? Do I have something? Do I have a strategy in place that I've been working up to, waiting for the market to come to me, and now it's come to me and I'm taking this trade? If that's not the case, you shouldn't take the trade. You should not take a trade based on emotionality or because the market's starting to push down, because look exactly what happened right here. I'm actually going to change this to a path. Where is path? I always get lost. Fine. There we are. A lot of times especially in these smaller markets, comparatively to traditional assets, you get a shakeout, which is we have this downward price action. It commits people to going short. It lets those emotional traders think, oh man, I got to sell. And they sell. And by selling, they push the price down. And now there's liquidity there for basically getting a lower price entry. And then they send it back in the direction they actually intended, which is there we go. Back to the upside. So the whole point here is you need to have a strategy in place. And this did sell off. This was already rolling over. So this was just sort of a continuation of the move that was already in play. And then they exacerbated this move to the downside temporarily, testing. The bears were testing to the downside to see, is this going to be a proof for the move to the downside? We got some economic data that in reality is good, but why is this good data bad for the market? Well, there's two things that happened here. As I said, they're trying to commit people to go lower. They get a lower price and they reverse it back to the upside. So why can this data that is good? We have a lower unemployment rate. See, 3.6 was projected. We came in at 3.4. We're even lower than this is the data here. The previous month, we're even lower than that. That was 3.5. We're at 3.4. The non-farm payroll. This went from, I mean, this is more than double what the estimate was going to be. It's also about double, just shy of double of what last month was. We have a huge, we've got great employment data. And so the problem with this, and this is where the especially in Bitcoin and crypto, testing of the bulls and the bears. We can see all this data here. It is positive, but we know that the Fed is playing a game of cat and mouse right now. The Fed is playing this game of if the economy is looking far too strong and inflation has not been taken under control, then we're going to continue to need to raise rates and maybe become more aggressive again. You know, they were up at 50 basis point hikes several in a row, and then it went back. It went back to 25 basis points. The inflation is starting to come down, but if we're getting very strong economic data and we start seeing inflation back on the rise again, and we're seeing everybody's employed and unemployment rates coming down, this is giving fuel to the fire potentially. This is a potentiality. This is what we need to do when we're in markets. We need to look forward. We need to be aware that this could give fuel to the Fed and for these, the monetary policy decisions about potentially keeping those Fed interest rates continuing for a longer period of time and not terminating them in March like many people are hoping. So let's continue on here. And I just want to point this out here. Caleb Franzen, who was a guest on here a couple weeks ago, excellent person to follow if you're not following him yet. He says, parties are the most fun after 1 a.m. after everyone takes an extra shot of tequila and the music gets turned up. Turned up, baby. Then people get careless, vases break, someone spills wine on the couch, you wake up on the stairs with a hangover and need to clean. Well, the economy just took another shot. That's essentially a great synopsis of a playful metaphor of what I'm talking about here. Although this is very good, this data is seemingly very good at first look. When you look at the context of how the Fed and the government has to engage with monetary policy to ensure that inflation doesn't get out of control, this is sort of takes the feather out of the cap around all that sort of stuff. So let's continue on here. Now, of course, we also have to pay attention to where we're at in cycles and also understanding that the DXY, I've mentioned this on many streams so far, but the DXY is the dollar index. You're basically weighing the strength of the dollar against the world. Primarily, it's mostly against a basket of some key currencies, but in reality, it's measuring the strength of the dollar. How expensive is the dollar to the rest of the world? And also for us, how strong is the dollar? And when the dollar is rising rapidly, I just want you to look at this correlation. When the dollar is rising in value rapidly and how much it's comparatively, the strength of it against other currencies, the strength of this also takes away from the liquidity that can go into risk assets, that can go into investments. Bitcoin, very much so, especially in 2014, was an absolute, probably, very, very, very risky asset. So as the dollar is increasing here, why could that be? Well, that means part of it is there's money coming out of traditional investments and being held in dollars. It also means there's things going on with monetary policy and our government and in correlation with what other government other government monetary policy is. So, and we can see right here, the inverse of this is when the dollar value falls, there's money coming out of the dollar and going into other assets. So money, there's also thought of if the value of the dollar is falling and it tends to be tied to certain economic conditions, as the value of the dollar falls, people want to be in assets. They want to hold on to things that are going to increase in value. And we can see this is a perfect correlation. Down, up on risk. Down, up on risk. down, up on risk. And then this, of course, is huge this uptrend in the value of the dollar is correlated very similarly with this 2014, 2015 push up for the dollar, which saw a huge bear market here for 2014. Now, looking where we're at right now, what we're trying to do, and what all of you should be trying to do, what I should be trying to do, what anybody in the market should be trying to do is not be a hype buyer buying because the market's exciting at the top. You buy at the top, great. If you're trying to wait until we pass this all-time high again, there will still be juice left in the tank, sure, but the smart money's taking profits at these levels, and you are giving them the liquidity so that they can sell because you're buying at these highs. When things are expensive in a store and they're overpriced, do you buy them or do you wait for a sale? I want that to get through all of our heads. We need to wait for the sell of assets, meaning the sell prices, those lows. And we need to use these tools using this isn't even using indicators or anything. This is just looking at price action and looking at the regularity of the trend of market cycles, which I have talked about so many times on this channel. Remembering this market cycle trend where we have accumulation, push up, pull back, push up, pull back, push up, pull back, distribution, breakdown, relief rally, breakdown, relief rally. We want to be buying somewhere in this region for really strong medium term plays, medium to long term plays, to take these positions all the way up here. And the traders, the swing traders that are trading this, we really want to wait for us to get that breakout, a confirmation of the breakout, meaning the bulls push up, they take profits. They gauge the strength of the bears by seeing this pullback and where the money's coming back in. Are we starting to form a trend line? Meaning we have one point here. Where's the next point? Is this bouncing? Okay, this bounces here and we break this high, which is essentially this move played out right here, breaking this previous high. And now we've got the proof of the trend. Now, once you have your trend in trading and investing, it is so much easier and so much more profitable to consistently, profitably trade, because a trend is your friend to the end. Everybody says it on crypto Twitter, on trading Twitter, trading influencers, but it really is the truth. You need to understand the trend, because people that are looking at this market, let me come over here. People that are looking at this market, if we come out to the macro, come over here to auto, this right here is very choppy. People they're going all in long with leverage. It comes up and then they get more capital, they put it in and they add to it, and then it reverses and then they get liquidated. And then everybody's like, oh, I guess it's going short. And so then they go short and then the market reverses. But this is not the spot to really be doing leverage. I really want to emphasize that with everybody. We want to have the proof of this trend, which is for this to come up like this, how it has come down, test that, break this level here. And this is also the golden pocket from this move here. This is golden pocket, and look at this key level. I marked this out. I mean, I don't even know how long ago I marked this chart out, but this key level right here, 25.6, 25.2, this region right here around this golden pocket and this previous high, this will be truly our first real higher high on this level, and breaking this local previous high here, proving this move. Once we break this level, get a little bit of a rejection, and then come up here, likely get rejected down, and then continue the move. The point here is that we want the proof of this initiation, the proof of the impulse into the bull market. We want not just a massive, we call this, the God candle, the massive green candles pushing up, and we feel like, oh, FOMO, I'm missing the move. I need to get in right now. And you get in because, we finally break this move here. And we can even zoom in on this. We finally break this move, this massive downtrend resistance. But then when a lot of people get into this massive downtrend resistance, then anytime there's a little bit of shakeabout, because they don't have conviction, because they don't have strategy, they get in and they get in. This is the where is it at? Yeah, this is the move right here. This is a massive downtrend. They get in. and then it starts pulling back and they sell. And when they're selling, who's buying? Smart people that are accumulating for the continuation of this. So, and then this person buys, and then other people, you know, the market moves back. Don't get shaken out. The whole point is here, I don't want you to be shaken out, because when we look at some data here, we can see that this is the weekly this is the weekly returns on Bitcoin. We've had four positive weeks in a row, and now we're coming up to the tail end of the fifth week, and it's okay if we have a little bit of a pullback. This is okay, because if the higher we go up and the faster we go up, the higher we go up and the faster we go up on this chart, the faster we'll fall. So if we push up, have some consolidation, push up, have some, it's almost consolidation here. It's still a weaker momentum push to the upside. And I'm going to delete this so it's not in our way. It's a weaker push to the upside. So we still need, I still feel like we still need, and it's not a crash, it's not a dump, it's not like the bull market's not going to be engaged. This is a bullish thing that can happen. A pullback for me is the most bullish thing that could happen, because if we pull back and find confirmation on, look at this right here, this is also weakness in the volume profile, and we're starting to have high nodes right at this level, which is also previous levels. We could put a option or Alt J, gives you a horizontal ray. It's a nice quick key. A lot of interaction, price level here, price, you know, a lot of rejections. We had a pause here on the upward momentum. So having a pullback to this 21,000 level, 21,100, this confirms support on all these levels and flips this massive downtrend of resistance, actually flips it to support if we hold this level. Now, we very well could break through it. We've talked about this on a number of days, but the point here is, with all of this, is we've had a number of weeks in a row that we've had a great price action to the upside. We need to cool off, because think about it like a race car. If you have a race car that is Daytona 500 or Indy or F, whatever Formula One, whatever car you're thinking about, if you're just running it, red line as hard as you can for, say the race is 6 hours, you have to stop at some point in the pit to get fuel. You can't just run outright. You can't do it. And small pullbacks in this market literally are the market getting fuel. Well, why is this? Well, when we look at, we're going to pull up we're going to go on the daily. So we can see here, looking at the RSI, the MACD, and the stochastic. So this is a relative strength index. This is a moving average convergence divergence. This is showing momentum. This is showing strength. And this is a faster way of showing market the market psychology more quickly as it relates to strength. This is a little bit slower than the stochastic. So I like to use these in conjunction. And even with the BitLab trading suite, with all the indicators we've built, it includes all of this and like 9 other indicators all in this. So we really get a great picture on what's going on with momentum. I'll pull that up in a second. But what we can see here, my point with all this is, as we're pushing up, as we've pushed up into breaking this previous resistance, we got a bit of a bearish divergence coming in through here. And so it's already foreshadowing a pullback. If a pullback comes, nobody should be surprised. Anybody that's surprised by a pullback at this level, you're not doing your homework, and that's okay. You're here. This is a study partners. That's what this BitLab daily streams are for. We're trying to help really bridge that gap and give you these details that we're looking. I'm looking for this not only to pull back, but the nice thing about a pullback is if this pulls back, what I'm looking for is I'm going to do a horizontal array right here about the 50 line. Anytime the RSI pushes up, pulls back, and finds support anywhere above the 50 line, that's inherently bullish. And so what will happen if this does pull back? Very likely we'll get a drawdown of the RSI, meaning that the RSI will pull back into this, hopefully staying above the 50. Even if it dips down a little bit, it's fine. But the point here is this is giving fuel to the move. If this pulls back and stays above the 50, and the stochastics, they're not going to stay midline. They'll likely come all the way down to the bottom. This coming down to the bottom with this holding above the 50 line, and this confirming this as support, that is all systems go. That was the thumbnail yesterday. All of these streams that I'm doing are tying together. They're all tying together as to how we use these signals. This is what we want to do. So looking at this with the BitLab trading stack, using all all our monsters of indicators that just, there's so much data that we comprise in all these. This was built, Frankie Candles and I, as well as a massive, I'm talking like multi-$100 million, multi-times a day trades, hedge fund trader and programmer. We got together and used all the data that the big hedge funds use to trade to make those big plays, as well as how do we relate this to traders that are looking at charts and reading divergences. And so we see we've got unbalanced volume, and I'm going to double click on this so we can see what the divergences are. We have divergences. This is looking overheated. These bars are sticking out of the cloud. This is gray, so this is a bit neutral. So we very well could get a push up even further. We could get a push up even further to this golden pocket that's sitting right above us, previous top, this 25.2 level, 25. A lot of people are saying 25.2, and I'm thinking it's this region from 25.150 up to 25.5. We could get a push up, basically trapping more people to the upside, and then roll over and then find this pullback, find this level. But as it looks right now on the daily, we're starting to look overheated on the extrema. As you can see, they are sticking out of the cloud, which means it's looking for a cool off or a pullback. But this is gray. This is not red. So this is neutral, and there's no divergences on the volume. So there could be a little more juice in this. So let's go ahead and zoom on down. Let's go zoom down to what's going on here we're looking at the 2 hour. So there's stochastic, momentum divergence, bullish money flow, bullish relative extrema, bearish stochastics. So this is just chopping around because the market's trying to find its legs right now. The market, the traditional assets, S&P 500, Dow Jones, excuse me, a Bitcoin, crypto, they're trying to make sense of this Fed meeting that happened this week. The interest rates are determined, but now this data that we got today is putting a little bit, it's giving more indication that there will be another interest rate hike versus not be one. So this is where this choppiness is coming from. In addition to having weak earnings from, Apple missed its earnings, I think, for the first time since 2016 or 2017 or something like that. The rate of growth for other industries is slowed as well, but there are still positive earning reports out there. But there's just not a lot of clarity here. So I'm still looking for that pullback. I'm not adding to my positions here for an upside move. I'm already in position. I have a plan. I've practiced it. I am in position, and I'm sticking with what I've got. What I am doing is I am moving my stop losses, and I'm moving my positions and actually entries. I have some stop losses, but I have more entries programmed into what's going on in the chart, and that's based on, if I double click on the chart, I do have some stop losses for major moves, but what I'm really doing is looking here at this potential rollover and noticing that if I'm believing of a move to happen, why am I not going to take advantage of that move? That's what investing and trading is all about, especially profitable. So if I'm thinking this is going to come back down to this 21,107 level, I have a ladder of entries, and I've talked about this on multiple streams. I have a ladder of entries around this level, just above it, also just below it. Excuse me. Also just below it down here, and then I have, and that's in the 19.6. Excuse me, 19.6 level. I have a 19.6 level, and then also the about 20. I think it was about 25.50, and then 21.7. Laddering my entries, and then below that, if we were to hit all that, those already have stop losses in place. basically, and I'm going to do a whole lesson on this. It's not going to be in a live stream. I'll do a lesson. It's all of this is broken down lesson for lesson in BitLab Academy. If you're not in there, get in there. We got the huge updates are starting to roll out this month. That's on the plan. We're still filming every day, editing, all that stuff, but all focus content. Every lesson's a specific video, so it's not all just 45-minute videos. They're specific lesson videos, but I'm going to do a specific lesson video here for you all on BitLab Academy daily streams. It's going to be one of the afternoon videos that'll be coming out, but to show you how to set your stop losses and set, because on entry of a trade, you can have all your risk management already in place in that trade. You don't have to set a trade and then the market starts moving and you have to go and sell to protect yourself. No, you can build this into your action of even entering the market. You can set your stop loss, you can set your stop limit orders. So if the market does roll over here, it automatically triggers the entry, and then on triggering that entry and buying that asset, whether it's Bitcoin, Cosmos, Cardano, whatever coins you're looking at getting, on entering that position, it also automatically has a stop loss in place. So you don't have to be so worried in the market because you have a plan. But I'm gonna pause for a second. How is everybody doing? How are you feeling? Shout out to Alex Green. Yeah, talking about the rounding top. I wasn't even trying to draw that on here, but it definitely is looking a little bit like that, especially with the EMA ribbons rolling over. But how's everybody doing? Are you bullish going in for between now and Sunday? Are you bearish? Are you up right now in profits this week? Are you down? You don't have to say what the numbers are, but we're supposed to be a community here. We're supposed to be working with each other. Let me know what you're feeling. But yeah, there's a lot going into this market right now. There's a lot of hope. There's a lot of hope in this market right now because 2022 was an abysmal year. It was just such a red year, and I think a large majority of people in the space, even people that have been in the space for a long time, forgot to look at the 4-year cycle. I brought this up the other day. Let me pull this up on screen and then I'll share it. The rational. There we go. I brought this up on screen the other day. Make sure you go and follow this guy, the Rational Root, at the Rational Root. It's great data, but he has these spiral charts. Where is it at? And look at this. Basically is time. Okay, and as it's pushing out, that's price going up. But we can see these maroon dots. These are bottoms. Look at this. We're 100% on target for where we should have been. And so when we were wondering, looking at charts, oh my God, when is this ever going to end? Oh, is this the bottom? Is this the bottom here? No, it's not. Look at the 4-year cycle chart for Bitcoin. Is this the bottom? No, we still got, we still have, let's see, we still have roughly, 175 days to go. And then this feels like it just trudges on and it exhausts people, and people keep buying. And I did this early on, when I was doing trading stocks in 2012, 2013, 2014, I was an emotional trader, and I think I made 20% profitable trades. It wasn't until I got into crypto and I was actually super passionate about the assets I was investing in that I really dove into understanding technical analysis, the psychology of the market, understanding that the price action on a chart is just a visual graph of the average psychology of the trader in the market. So, and looking at time graphs and understanding all this stuff and how regular, finding correlations of time periods as well as patterns in the market as well. All these things, they tie together. So even indicators only work consistently and profitably if you tie them to the knowledge that you have within the market. So, and that's just understanding the psychology of the market. So I just want to encourage you all to keep working. If you take losses, look at your loss and identify what you did wrong. Were you too greedy? Did you trade emotionally? Did you wait for the setup? Did you have a plan in place before you went into it? Or did a friend tell you about that move? You need to look at all these things. So we can see, I know we can see all these wicks down. This is people panic selling and then being bought back up. And the wick is the skinny stick that comes out of the bottom of the candle or the top of the candle. This is sell pressure coming to the downside, people panic selling, and then it finding support here, and then large buys coming in because they've seen this support from all the way back here. They saw this projected out, and the buys start coming in, and as buys start coming in, then it cascades and liquidates the shorts and gets very bullish pressure to the upside. And then people go, the bear market's over, let's go full long. And then they go full long, and they're super stoked. And this wasn't a small gain. This was, this is a 25% gain. And then it reverses back to the downside. Then we get the FTX crash. And that's what we need to pay attention to right now, as bullish as we can be. As bullish as we can be. We have key levels directly above us. We haven't fully confirmed the breakout from this downtrend resistance, and we just need to be patient. So, jumping back into chat, I just want to shout out everybody here. Thank you for being here. If this is your first time, let us know it's your first time here in chat. We're really trying to build a great community here. If it is your first time, also let us know where you're from, how long you've been in crypto. And for everybody, again, whether you like me or not, I'm just trying to share my experiences with you. This is all about trying to help you all prevent the mistakes that I made along the way when I was early on. Make sure you hit that like button, hit that subscribe, ding that bell, and let me know. I'm going to do a couple of altcoins here as we wrap out the last 20 minutes. I'll just start doing them, but post in chat something you've been eyeballing. You're trying to find the entry. Is it a good entry? Is it not? Again, none of this is financial advice. I'm just showing you my process, how I go through this so that you can learn from it and do it yourself. And we're going to go through some of these charts. And we did a number of altcoins yesterday. Let's do some different ones today. I don't think we've done AVAX yet. If we did, I don't remember. So let's go ahead and do AVAX. So what do? We do the macro, midterm, micro. So let's look at the macro. Okay, we got, let's do a better chart here. There we go, more data. Okay, so we got, we're going to do the macro. I'm just doing tops here. I'm just doing tops quick to get a map of some key zones of where price action will likely pause. Okay, I see somebody put rare, somebody put Matic, or I thought they put Matic. They didn't. It says Matt C. Shout out to unforgettable name as well. What's up, King Peasant? I see you in there also. So many names in here. I am going to do rare as well and render because those are some alts I know a lot of people are looking at. And so now what we're going to do, now that we have this map, I'm going to minimize this. We have our macro. What we're going to do is I'm going to do it from this move, Option F, or if you're on PC, Alt F gives you the Fibonacci tool. That way you don't have to come back and forth over here to the toolbar every time. I'm doing this fib from this high here to this low, and now I'm going to do it from this high where we're at here, Option F. Now click on the chart from the top to the low. This gives us a couple points. Now look, I always love seeing this, and it doesn't even surprise me anymore. But look at this breakdown to this low, and look at where we paused, right at the golden pocket. This, if you do nothing else in trading and what do you call it? Technical analysis. If you don't adjust anything, if you're not using Fibonacci's, I want to challenge you to use them, and at least come in here, type in. Actually, you don't have to type it in. My apologies. You can pull up the fib, which is here on the left, and you can go to fib retracement or do Alt F and pull up a fib, and then double click on it. So I can double click on it. And when you double click on it, it brings up all these settings. Come in here in one of these settings and add 0.65 and select it. And you can deselect a bunch of the other ones. I like to keep it. I like to keep these settings: 0.382, 0.618, 0.65, 0, 1, and 0.786. It doesn't matter where you put these on what side and what order. It's just going to map them out here. It's 38.2%, 61.8%, 65%, 78.6%. And the 1 and the 0 helps you see where the top and the bottom is, if you drew it correctly. And this way, you can see these are the key fibs that most often have interaction on the chart. So this is pulling up, this retrace it broke out. Just using this EMA ribbon, which we can see this blue and this green over here. These colors, this is part of the market intelligence, BitLab market intelligence. If you want more info on these indicators, come over to BitLab Academy, come to indicators, pick these out. These are honestly incredible indicators. I love them. It's it's up my trading game immensely because it calls out all these divergences. It also shows trend tops and trend bottoms with the red top wave, blue bottom wave, and then if the move is too fast and there's going to be a cool off, we see here. And then we also have volume divergences, which are just a great final sort of signal in the coffin. But with the fibs alone, we can see that this likely is going to have a pause or even a rejection and a pullback, bounce down to 382. So what I like to do is look at this fib. I see this, and I have a plan in place. I'm going to be looking at my indicators and my setups of what's happening on those indicators when we reach this golden pocket. So I use this price action as an indicator as it relates to Fibonacci retracement, and then I come in here to my indicators set itself and my template. And I'm looking for a bearish divergence here on the BitLab hidden volume. If we get a bearish divergence there, in addition, we can see this is sticking out of the cloud, as we can see here. So that's saying this is calling for a pullback, and I don't take any trade on any individual indicator. Even though each one of these indicators uses the combinations of indicators within them, I'm waiting for the relative extrema to signal it, which it has. I'm waiting for that we have bearish divergence. We have three of them. We have RSI, on balance volume, and the hidden volume, not hidden volume. There's an external one I've plugged in here. But so I only have two indications there. But now we're right at the golden pocket. So that is a third. But my I don't want to call it a sure trade. My most probable trade is when we get this H, or if there's an H or an R on the top, not on the bottom. That's bearish divergence in volume, meaning volume doesn't agree with this level. It's coming out. It's asking for a lower price, and we already see it's overextended. That would be my short trade. It's using my technical analysis. Do you understand what I just did? The most profitable trades in crypto or any asset is using your understanding of price analysis and technical analysis and a combination of key signals, whether it be Fibonacci retracements to golden pockets or looking at things like an EMA ribbon and moving averages, and use that in combination, in concert with your relative strength index, your stochastics, your MACD, or your combination of indicators from the BitLab trading stack, the significant movement, hidden volume, relative extrema, market intelligence, divergences. Using these combination of data points, looking at charts and pulling them in, and using this concert of data points together will give you clearer signals. But I will tell you right now, you will miss some trades. And I'll tell you, I would rather miss trades on a regular basis and be profitable consistently than take a lot of trades because they're signaled, say Fibonacci, it shows a short, but you're not noticing that there's other signals there that are not agreeing with that short just because you got to the golden pocket. If you're not using a variety of data points to paint a clear picture, then it's you trying to emulate Leonardo da Vinci trying to do the Mona Lisa just with a crayon on a piece of paper. You can't do it because you don't have enough colors. You don't have the right canvas. You need to have the right canvas and a variety of colors to make a masterpiece, to do it consistently and to do it profitably. All right, so let's continue with this. I'm looking for a small pullback, likely on AVAX, but I'm not sold on it. And I would be looking for the level. I'm looking for the level down at around this. This is the 382, right at the 17.95 level, and I would expect to bounce there. I do think we're going to get some bullish sort of play out on the charts this weekend. There's less institutional players over the weekend. It's more retail. The markets move less like market makers intend to on the weekends because there's less acculturated traders and investors in the market. So I'd be looking for a move down here. If we do lose this level, then I'm looking for this level right here, which is 1383. I actually have a decent size order in place right about in that region, 1380 to 1395. If it pulls back here, I'm really looking to take advantage of this move, because you know what I did? I had to choose in my portfolio where I wanted funds allocated and what I was holding on to, and there were some moves I wanted to make. I took some profits on AVAX and reallocated funds. And so, the FOMO part of me is like, damn it, why did I do that? It's pushing up. But then I look at the other two assets that I put it into. Of course, they didn't push up the same moment AVAX did, but then they did push up higher percentage than AVAX did. And the other one, I have got incredible buy on because it was such a low price. But if we do move to the upside, I'm looking at a pause. $29 is a huge level of interest. If we do push up, if we break this, then we're going to be seeing some fireworks because there's no. If we zoom out a little bit, we're still on the weekly. If we zoom out a little bit, there's not much. I mean, there's not much interaction between 29 and 40. If we come down to the 4 hour. We could see, yeah, let me go ahead and mute and by the way, if you do have the BitLab trading stack, you can make these a lot more intelligible so it doesn't cloud up your chart. I make them big like that so you guys can see, and you can also have them not be shown. And you can also, in addition to that, you can also do just show, only show the last divergence, which makes your chart very clean, and it just does the last two here. But looking here, it does show we've printed a high, and we have gotten a little bit of a pullback, but we're finding support right here on the EMA ribbon. And this EMA ribbon changes color when that move is no longer has the support to continue. And we see this EMA ribbon was dark blue, and it turned light blue just as the price was falling. And where we're at right now, it's similarly. You can also see it on the candles, but I use it more predominantly as just an EMA ribbon for price. Now coming to the downside, we can see this is showing weakness because this was going up. And now this is sort of starting to round. So until we get, unless we get a proof of a move here and move to the upside, I am looking for some lower targets. So let's go on this 4 hour. We're going to go from the bottom, option F, go to the top. So I'm looking for a pullback on the 4 hour. I'm looking for, I thought that said $7. I was like, woo, that would be a price. I'm looking for a pullback in this, basically 1872 down to 1750, anywhere in this region here. And the reason that is because this was a previous local high right here. So anywhere in this region, I'd be laddering in smaller amounts, and I'd be laddering a lot more down at those 13 levels that I was talking about earlier. And that's also, look at that, right at the 786. Okay, what time is it? 11:21 a.m. Hey. Thank you, everybody, for being here with me. If this is your first time watching, by the way, my name is Kelly Kellum. We do this every day here on BitLab Academy, daily streams, 10:30 a.m. Eastern Standard Time. Make sure to follow me on Twitter. Make sure you're following the right account. Make sure you're following all the website and all the correct socials over here. If you're watching on Hit Network, shout out to you. Come over and check us out over here on BitLab Academy as well. The link is right there. You can just also search BitLab Academy. But let's continue this on before we wrap out. I wanted to do Matic, which I have here. And if you guys haven't yet, watch that. I'm going to come over here. Come over to BitLab Academy, and especially if you're newer, go through some of these videos. Check out these. A lot of the first 8 or 10, I was trying to really build the streams around giving information about how to use tools, how to use strategy, how to read certain things, how to understand basics of TA. So definitely check that out. And I'm going to be adding to this a lot, which is the the daily alpha playlist, which is shorter. These are the lengths they're going to be 8 to 12 minutes is the target. And I'm working more and more on making things concise, because as you all know, if you've been watching me from the beginning, I just started doing these YouTube streams about 2 weeks ago. I've had some other experience doing interviews and this and that, but doing the daily stream is a whole nother beast. Talking for an hour, I'm trying to slow down my talk to catch a breath. I didn't even have coffee today because I was hoping that wasn't a reason I was talking so fast. I'm just excited. I have so much I want to share with you. So thank you all for being here. Okay, Matic. Let's start on the daily. We know the macro has been a downtrend, so I'm just trying to do this quickly. Okay, we've got a level there, option J. We've got sort of a region here. I'm going to kind of split the region. This level right here is critical because we can see low and high. This is very important. As we can see, this is a lot of lows bouncing, and then now we have a rejection, and we are sitting right below that. So what I'm looking at with price level right now, I'm going to double click on the screen. I'm looking at, we can also see This is a bit of an ascending triangle, which is a bearish. I just reloaded my page, which is a bearish. This is a bearish sort of. This is a bearish structure. So this is very likely going to break down to the downside, but I do think we could push all the way up. This target here is $1.32, which would be quite nice. I think there's a likelihood that we do push up and get rejected, whether we follow this all the way up or break out and find rejection at $1.32. Come down somewhere in this region here, the dollar range. But let's actually pull a fib on this. Option F. This is on the daily chart as well. If this were to go up to this level, so anywhere between the dollar, I would think it would probably hold the dollar. But the $1.10 range is the level I'd be looking to pull back, and that's also confluent right around where this low is on this this move here. Come down to the 4 hour. This is, you know, the more you zoom in, the more you can actually see the chart pattern, especially when you drew it on the macro. And we're finding a lot of resistance at this level. If we don't break this with authority and find some sort of support as we roll over. This is going to be very tied to Bitcoin's price action, but this is in a bearish structure. We do have bearish divergence that played out. If we zoom in a little bit, this is looking overheated on the BitLab significant movement, which is showing that it's likely trend top. And look at that. It's right at the top of this resistance of this trend right here. But we are seeing some choppiness on the relative extrema, and there's no bearish divergence on the hidden volume. So this is looking a little questionable. It's looking a little choppy. The market, this goes back to what we were talking about a second ago. The market's trying to figure out what to do with this data that came in from the Fed. They're trying to figure out what came in with the earnings reports. They're trying to figure out what to do with the jobs data. And as this day wraps up this weekend, I think we're probably likely in for a bullish weekend, but I want to point out, if we do have a bullish price action this weekend, we have to, I'm going to come over here to, I don't think I have it on here. But what I want to point out is, if we go into this weekend, and I'm going to put it on the 3-day, and we get a large push up, I'm going to actually daily. I don't know why I did 3-day. If we get a large push up this weekend and we make it up to, let's say if we do get a push up, it's probably going to get up to 28,000 because of the lack of volume between here and there. And what will happen if we do that? If we get a push up to 28 over the weekend, that means the CME, there will be a large CME gap, meaning the futures, the institutional side of Bitcoin that is betting options and futures is closed from today at 7 p.m., I believe. Today, it might be 5. It might be 5 because they have traditional hours. Whatever time they close through when they open on Sunday at 7 p.m. Eastern Standard Time. Again, I haven't looked at CME stuff so long. It's Sunday evening. If we have a gap and this has moved up, then the price more often than not rolls over. So say the CME opens here because they're not trading over the weekend. If it opens up here, it very likely will have some form of wash down or test to the downside to clear this area right here of no trading. So if the CME opens up here, then that does give some indication or hesitation as to a likely pullback. I personally like it when we're in a bullish trend, not when we're in a bearish trend. I like it when we have sideways action over the weekend or a small dip, and then the CME opens down here, and it gives it's almost like a magnet. It's almost literally like it's almost like a magnet to the upside. It's almost like a magnet to the upside right here. So if the price does break down, it does start to come back up. But I did it again. I forgot to share my screen. My bad. So the whole point is, with all this, if the price goes up over the weekend and the CME is, the Chicago Mercantile Exchange is closed, then when the CME opens on Sunday, then there's a gap. If it's to the downside, then it doesn't mean the price has to go down, but it does indicate that the price, there's a likelihood that price is going to move down and close that trading gap and then resolve back to the upside. Yes, I know that there we go. So that's all I got. It's been a long stream today. Got a lot of data going through. Really appreciate everybody tuning in here. Just let me know. Okay, it is Friday. Is the price today where you thought it was going to be on Monday? When you were on Monday, when we were talking about Friday's price action, is it where you thought it was going to be? Now, think about the reason why I want you to think through that process is this is how you trade. This is how you invest is you look forward and you have a good idea. You try to project, you try to forecast where the market's going to go. So if your projections without even trading them are wrong, then you need to start fixing what your projections are going to be and give two projections. Give what's your upside target and what's your downside target. Because if you only give one, that means you're not paying attention or forecasting what the alternate sort of path can be. And if you don't know what the alternate path can be, when the market moves that direction, that means you probably don't have a plan, and therefore you're likely going to, if you do engage with the market, it's not going to be an effective strategy because you're pulling it out at the last minute. You don't want to just pivot in a moment on the market and make those trades. You want to have those pivots in mind ahead of time so you have a strategy, you have a plan in place. But that's all I got for you today. Again, my name is Kelly Kellum. Thank you for being with us here in the BitLab community daily live stream. I really appreciate all you. I hope you all have a wonderful day and a wonderful weekend. Get out of the charts, hug a friend, hug a family member, hug a tree, pet your dog, get out of those charts, but come back with a fresh mind. I'll be here on Monday, of course. I hope you all have a wonderful weekend. Make sure to hit that like button on your way out. Please hit the like button, hit that subscribe button, ding that bell, and we'll see you in the next episode. Adios, muchachos. Thank you for watching. Do. Adios, muchachos. Thank you for watching. Gonna send this to Hit Network to watch some BitBoy.